Welcome, dear traders. You are watching a recap of the Asian session. Yesterday, the United States and the European stock markets were mostly up. It appears recession fears receded. Asian stock indexes also kicked off Friday with a rise. US GDP data for the fourth quarter turned out to be better than the forecasts. This reinforced hopes for a soft landing. GDP climbed by 2.9% in the fourth quarter of 2022. Although this is a lagging indicator, it fueled optimism in the markets. Traders are more confident now about a possible slowdown in monetary tightening. Nearly 98% of investors are betting on a policy reversal. Earnings reports for the fourth quarter of 2022 also have had a big impact on stocks this week. However, despite a rather eventful week, the next one will be more crucial. One should be ready for a surge in volatility. The Fed will finally announce its rate decision. Jerome Powell is sure to make comments on future steps for capping inflation. Stocks are now rising steadily despite warnings from the Fed officials about keeping rates at high levels for a long time. The US dollar moved to consolidation in the Asian session. It was still trading in the narrow corridor of 101.70 and 102.00, trying to climb. Perhaps the chart of the US dollar index gives a clear idea of fundamental factors and market conditions. After all, there have been no significant changes in the greenback's bearish trajectory for 2 weeks. The trading curve of the index signals either patience or cautiousness ahead of stronger drivers. There are many reasons for its weakness. This is not about traders who priced in rate hikes a long time ago. The US dollar is losing steam against the euro, its main rival in the basket. And now the euro is pushing the US currency down as the ECB is likely to hike the interest rate more aggressively than the Fed. The US dollar fell to almost a 9-month low against the euro, trading on Friday slightly below the resistance level of 102 points, so it approached 101.94. As a result, the greenback has looked the third week of a steady drop. The US dollar also dipped versus the yen. The latter advanced largely amid Tokyo's core CPI data. Consumer prices jumped to 4.4% on an annual basis in January. Usually, inflation in Tokyo is a leading indicator of nationwide trends. It signals that inflation in February could be high. Inflation has been gradually moving away from the Bank of Japan's 2% target for the 8th months in a row. It escalates pressure on the regulator. This is why it may abandon its out-to-lose stance. Elder Haruhiko Kuroda keeps saying that the bank remains strongly committed to monetary easing. Traders take his comments with a pinch of salt. That was the main reason why the yen asserted strength on a Friday morning. Besides, it has almost been trading with a bearish bias for the third month in a row. The dollar-yen pair is recovering steadily after its 21-month bullish trend. During that period, the pair soared by more than 48%. In the Asian session, it dropped to 129.90. However, its increase was not as sharp as it was last week. Back then, it slid to a 7-month low of 127.20. In the morning, the pair was fluctuating in the range of 129.50 and 130.30, with the yen constantly growing higher. The AUD-USD pair added 2.2% this week. It notched the largest weekly gain since early November. In the Asian session, it was trading above the pivot level of 0.7000, consolidating near 0.7099. It made an attempt to approach its 8-month high. The pair was also boosted by rising inflation in Australia and expectations of a further tightening by the Reserve Bank of Australia, the reopening of China after a prolonged lockdown and money injections into the banking system also facilitated its growth. Only the US GDP report limited its upside potential. It turned out to be mixed, indicating the likelihood of a hard and a soft landing. Perhaps the Aussie will be unable to resume a long-term rally due to uncertainty. At least in the morning, it was moving in the downward range of 0.7095 and 0.7132. And that's all for now. Hit the subscribe button and keep close tabs on the market developments. See you soon.